Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at just about 10 o'clock, markets have reacted to way the global markets have reacted, including Asian markets, and we are currently down. Thanks to once again the fears of tariff and statements coming out of the US President Trump, and of course the possibility of elevated levels of tariffs once again is the noise that is coming out of the White House. And because of that, we've seen markets, Asian and Indian markets starting in the red and taking the cues. Our understanding is that even the European and the US markets later on in the day should open up with deep red color. Before I go any further, let me give you certain levels. 80,880 is the level on Sensex, down about 570 points. 160 points downtick on the Nifty. 24,590 is the level on Nifty spot. Bank Nifty marginally down about 140 odd points. 55,615 is the level on Bank Nifty and Nifty Bank. On Rupee dollar and crude oil, well, there is strength in the rupee of almost about 0.19 paise, 85.39 rupees to $1, and expect this trend to continue this week. On the crude oil front, marginal uptick, but lower level, $64.44 to a barrel is Brent, $62.22 a barrel is NYMEX. There has been some news flows from the OPEC plus nation led by Saudi Arabia that they are going to maintain the production level at whatever it is, and in fact, they are going to increase the production. That means there's going to be more supply coming into the world energy basket in form of NYMEX and Brent. And because of the tariff fears, the global economy could possibly slow down, and that could lead to lower consumption in crude oil. So I think for emerging market countries like India is very positive when you have lower consumption levels, higher production levels, and more importantly, lower crude oil prices. So this the situation. Possibly 62 on the Brent and 60 on the NYMEX is the level that we can possibly see during this month. On the rupee dollar equation, well, the reason why we expect more strength to come into the rupee is because we are virtually standing very close to the credit policy date, and the way the inflation numbers have come in earlier last month, and of course, more importantly, the way the GDP number has been delivered. Expectation was 6.8 and we've done 7.4. Inflation is very close to that comfort zone and sometimes below 4% of that comfort zone of the Monetary Policy Committee, and hence there is a view that we are preparing ourselves for one more rate cut, third time in a row. Uh, 0.25 is the general expectation on the street. On some section of the market, participants are looking at 0.50. But prudent to go with a lower expectation of 0.25 and leave it to the wisdom of the Monetary Policy Committee and the RBI Governor whether to give more or not. But definitely 0.25 is the rate cut coming in, the credit policy, which we are likely to see very soon. Q4 numbers virtually done and dusted. Hardly one or two companies here and there, largely from the small stroke micro cap universe, is going to deliver. And to sum up the color and the shade of the fourth quarter earnings, uh, like we've been maintaining, better than third quarter and expectation of improvement in the first financial quarter that we are going to witness for this new financial year. Uh, Expect range bound movement on the markets on given the drawback, but good to see is that we are managing to protect 24,500. So that's one positive thing. From the lows of the morning, we have recovered smartly. So the range on the lower side, if I have to put a particular range, at least for this week, friends, 24,400 to 24,500 is the lower end trajectory. 24,800 to 25,000 will be the higher end trajectory. And my sense is that rather than driven by global cues, our markets would now be driven by local triggers, which we expect to be very, very positive. So, as of now, we are stuck in a range. And more importantly, I think every time we have recovered in the last couple of years, that recovery has only come after a brief period of consolidation. And that consolidation range has steadily moved upwards. So, since we are trading in a range with a positive bias as far as the protection of lower level is concerned, a view is that possibly we may spend another week consolidating between 24,400, 24,500 on the lower side and 24,800 to 25,000 on the higher side. While the markets would continue to consolidate, there would be stock specific moves which will enable traders to take their positions accordingly. So this is the view. Uh, India VIX again bouncing up, but much lower than where we were beginning of last week. Currently, as I speak to you, India VIX is about 16.65 with a bump up of almost about 4% this morning. Uh, so remains to be seen how the volatile index manages. And of course, like I mentioned, the tariff news flows from the US, from President Trump, and of course, the cases filed in the respective courts in the United States of America against the thought process and ideas what President Trump has. So it's going to be a legal battle as we go into the future, and the outcome will be something that we all of us will wait to have a little bit of more clarity as far as where the markets are headed. But the good part, and of course, we've had month-on-month sales numbers unfolding since yesterday, today for the auto sector. Expect the positivities to continue, but there is also the tariff sword that is hanging on the auto sector. On the metals, we've heard from 25% to 50% tariff is what President Trump has spoken about. And likewise, we are seeing reaction on the sector. So, friends, since it is going to be a range bound move in the market, and more importantly, depending upon the news flows, you will have stock specific moves. If you're a trader, please use your wisdom accordingly and put your stop losses in place. But if you are an investor and looking out at investment ideas at the lower end of the market, then every Monday we suggest two fundamental investment ideas suggested by our fundamental research team. And the fundamental research team uh, in its universe, uh, this time we have identified two names, one from real estate sector, one from the hospitality hotel sector. The real estate sector is DLF. Our fundamental team has a positive coverage on DLF from a long-term point of view. Start accumulating at current levels. Don't put all your money at one time. Use dips to accumulate the stocks at lower level. But prudent to say one thing that despite of the discipline that has come into the real estate sector, it still happens to be a high beta sector. Meaning, when markets are good, they will lead the rally from the front, and when markets go into a correction mode, they would be the first ones to pull the market down. So that's what the definition of high beta is as far as the real estate sector is concerned. But yes, DLF happens to be the name reckoned by our fundamental research team from a long-term point of view. The second one is from the hospitality stroke hotels. And we've seen consistent upward mark as far as the room tariffs are concerned. Room occupancy are steadily going up. Expectation of another 15% rate hike is what some of the managements have mentioned post the fourth quarter earning. And income from banquets, restaurants, and beverages, food and beverages, looking extremely, extremely strong. Indian Hotel, one of the mid-cap investment ideas amongst the amongst the hospitality play. There are a couple of other names, but we believe Indian Hotels, again, a Tata Group company, has decent number of properties, planning to open up and add more rooms and more properties under its wing. Uh, Market share would definitely be larger, and of course, the positivities about business travel, leisure travel, and of course, religious travel, medical related travel will keep the room occupancy rate on the higher side. Both these are fundamental investment ideas suggested by our research team So please bear in mind that you need to have long-term time horizon, and the definition has to be 12 months, 18 months, 24 months plus. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of yourself.